First things first, if you have just one bank account that you're literally doing everything from, I think that setup is already a bad setup. You can't just use one bank account for every single thing. Like, you need to have several accounts that are specifically for certain things, which is what I'm going to be detailing in this video. Hi guys, welcome back to the channel. So in this video, I'll be talking about the 6 must-have accounts every financially responsible adult in the UK should have to build a strong financial foundation and also to help you better manage your money. Whether you're new to managing your money or you're looking to optimize your current setup, you will get a lot of value from this video. Without further hesitation, let's get right into it. Now, the very first account type you need to have in the UK is a current account, which is what I call your regular schmegular. It's your regular account where you use it to receive payments and also to do like your day-to-day expenses. So it's this account that you typically get paid your salary into. It's also this account that you do your shopping. If you're going out, that's the account you're tapping from. That's the account you're using for online things. That's the account that you use for expenses and for your income. And also in the UK, there are accounts like Monzo and Sterling that help you stay on top of your expenses. They do like a spending analysis, help you know how much you're spending, and also like help you create pockets for different types of expenses. So you should definitely check out those kind of accounts if you don't currently have one. And by the way, if you're using Monzo or Sterling, leave a comment down below. Let me know what you think about them. What has been your experience using either of these banks? Let me know. Leave a comment below. Now, the second type of bank account you need as a financially responsible adult is a high yield savings account. So just like the name says, this is the account where you save your money. You save things like your big purchases or like your emergency fund in your high yield savings account. And the reason why this works is high yield savings accounts typically have higher interest rate than a current account. So your high yield savings account, currently in the UK, you have some as high as 3.5 up to even like 5 point something percent, which means that your money is earning money every single day. You're just earning money for keeping that huge amount of money in those accounts. So like your emergency fund, you want to put it in a high yield savings account, or if you're saving for a house, I mean, apart from using a LISA, which is a lifetime ISA, you want to use a high yield account, so you're also earning money on your money. And something I want to say here is a lot of people tend to not want to switch bank accounts because, you know, it's a lot of work to change your financial like setup. But the truth is, why are you paying loyalty to a bank that doesn't really care about you? Like, why are you keeping your money in an account that's not doing anything for you just because you don't want to go through the hassle? But the thing is, once you switch up your financial setup, it's a one-time thing. You do it once and you reap the benefits for months to come. So like for me, I'm constantly looking out for the highest interest rate on the market. I'm not loyal to any bank. It might be a bit difficult or a bit challenging to do it, but truth is, once you make that switch, you're definitely gonna reap the rewards for that. So there are several banks out there that do like high yield savings. I know Moneybox does, I know Plum does, Marcus by Goldman Sachs. Like, you just literally need to do a deep dive. Just Google high yield savings accounts in the UK and you can compare the interest rates. Now, speaking of high yield savings accounts, I did a masterclass on optimizing your savings account, and I walk people through different strategies for different income brackets. So if you're any less than 50,000, the type of accounts you need to have, and I also mentioned the exact accounts you can use. And if you're a higher interest rate, I mentioned how to optimize your savings to ensure you're earning more. So the replay of the masterclass is in the link below. It's literally bite-sized lesson, and also you get a detailed guide of the best high yield savings accounts in the UK, including talking about things like FSCS protection, access to your money, easy access, fixed access. Like, it's really detailed. You're gonna get that along with the replay of the masterclass, link in the description box below. The next type of account you need to have in the UK is an ISA account. ISA is individual savings account, but for the purposes of this video, I'm going to go into 3 types of ISAs. I mean, there are like 4 or 5 types of ISAs. I'm going to just mention them. There's lifetime ISA, there's cash ISA, stocks and shares ISA, innovative ISA, junior ISA. But in this video, I'm only going to emphasize 3. So the next account you need to have is a cash ISA. Cash ISA is a type of individual savings account. It's literally a savings account, but the only difference, it is tax efficient. So what this means is anything you earn as interest in this bank account, you do not have to pay tax on it. If you're in the higher tax bracket, meaning you earn 50,000 and above, it's in your best interest to optimize using cash ISAs as much as possible before, you know, looking at high yield savings accounts. Like I said, the masterclass that I have is going to show you the different strategies for the different tax bracket depending on the one you're in. It's going to detail that for you, so link in the description box below. There are several cash ISAs out there, but one of the highest ones that I know of at the moment is one by Plum, which is currently I think 4.92%. It's a new product, so they are offering like a intro rate. Did you get? So it's really high at the moment. If you want to create a cash ISA on Plum, link in the description box below. You can open an account with them and then start saving into that. Now the next type of account you need to have in the UK is a lifetime ISA, and you use this to save for your first house or for retirement. So I already have a video where I went into detail on lifetime ISAs, how they work and everything. Make sure to check it out. So I'm not going to dive deep into lifetime ISAs here, but essentially it's an account where you get a 25% bonus from the government for every £4,000 that you save in each tax year. The UK tax year runs from April to April, so every tax year you can put £4,000 in this account and the government will add £1,000. There are several drawbacks to the account. Like I said, I'm not going to go in depth into this because I literally have a dedicated video on lifetime ISAs. That's the next type of account you need to have if you're in the space of, you know, wanting to buy a house, or you're trying to look at other alternatives to save for retirement. Now the next type of account you need to have is a stocks and shares ISA. This is the one that I like this one, okay, because this is the one you use to build wealth. So stocks and shares ISA, like the name implies, is an account you use to invest. So if you want to start investing in the UK, you want to buy stocks, you want to buy funds, you have to open a stocks and shares ISA. But the good thing is most of those platforms that you invest on, like any investment platform, once you create an account, they would typically open a stocks and shares ISA for you, as long as you say, oh yes, you want to invest. So stocks and shares ISA is your investment vehicle. Now the really cool thing about it is that you don't have to pay tax. If you invest in stocks and shares ISA, you know, your investment is yielding returns and, you know, your money is growing. You don't have to worry about, oh, you need to pay tax to the government on this. No, as long as the money is in the stocks and shares ISA, you don't need to pay tax. Where can you open a stocks and shares ISA? You can open with your high street bank, but typically I wouldn't suggest that, because your high street banks, they tend not to have a lot of investment options. Like the investment pool they have tends to be smaller. So you're better off going with a platform that is specifically for investing and opening a stocks and shares ISA there. So you have Vanguard, there's Nutmeg, there's also Plum, there's Trading 212, there are lots of accounts out there. Just do a Google search and you find different types, and you can just compare and read through the fine print before you open the account. The last type of account you need to have in the UK is a retirement or a pensions account. Yes, I'm going to talk about it. Yes, you're going to get old. Yes, you need to start planning for future you, because for me, I want to be in Dubai in my 60s, shaking my bum on a yacht. That's what I want to be doing when I'm 60, okay? So I need to have enough money to fund Grandma Chidera's lifestyle, okay? So you need to have a pension or retirement account. If you're employed, typically this will be a workplace pension, so the account will be created for you. You're auto-enrolled, but you can decide to opt out, but please do not opt out because you're losing out on free money from your employer and also from the government. And if you're self-employed, you want to look into a self-invested personal pension, also known as SIPP. Yeah, so you can open your own pensions account if you're self-employed and ensure you're contributing into it. So there are different types of pension. There's, you know, this workplace pension that I've mentioned, you know, the self pensions, the one where you're saving for yourself as a self-employed person, and then there's the state pensions. Now for the state pensions, you need to have done at least 10 years of contribution to national insurance to get some state pension, and then you need to have done at least 35 years of national insurance contribution to get the full state pension. Now the thing is, the current state pensions, right, it's not enough. Like the amount they pay out every week, it's not going to be enough to live the life that you want later on. That's why it's very important that you have workplace pension and not just depend on the state pension, because currently the full state pension, like how much the government pays out to pensioners that have done 35 years of national insurance contributions, is £221 per week, which works out to about 800 and something pounds in a month. I don't know about you, but 800 and something pounds, it's not a lot of money right now, like for someone to, you know, live comfortably on. So you don't want to depend on the state pension. Also with the state pensions, the retirement age keeps moving further away, and by the time you and I are ready to retire, the retirement age is going to be even further away. So currently the retirement age in the UK is 66 years, and it's even going to be pushed later to 68, and before you know it's 70. By the time you and I retire, maybe retirement age will be 75, who knows. So point is, don't just depend on state pension. You need to really ensure you have your workplace pension if you're employed, or you have a SIPP if you're self-employed plan for future you and don't just depend on what the government has in store for us, if that makes sense. Now, the last type of account that you need to have in the UK, which is kind of like a bonus, point on this topic, is a credit card account. So as you know, credit building is very important in this country, and if you want to have access to financial facilities like credit facilities, like especially a mortgage, you need to have a good credit history. And one of the ways to build a credit history is to use a credit card and pay it off in full. See what I said here? I said pay it off in full. Don't pay just the minimum balance every month. You have to use it responsibly. Pay it off in full, okay? And don't use it recklessly, because you can use your credit card to build your credit score. So a credit card account is one of the accounts that you might want to consider opening if you're in that space of trying to actively build your credit score. I already have a video on how to boost your credit score fast. Make sure to check it out. I go more in depth in that video. I'm going to link it up somewhere up here. Okay. But my most important tip for you when you're trying to open a credit card is to look for credit cards with low interest rates, okay? And then if you can get those that don't have annual fees, that would be great. Or those that offer like incentives like flight points if you're someone that travels. Just ensure you do a whole lot of comparison before you decide on which credit card account to open. If you're new to building credit, there are credit building credit cards. Basically, these are credit cards for people that don't have a credit history in the UK, but the only downside is the interest rate on this tend to be really high, but it's a good place to start. Like I said, the video on credit score that I already have goes in depth on it, so make sure to check out that video. So to recap, here are the 6 essential accounts that I mentioned. First, a current account, which is your financial hub for your living expenses and for receiving income. And I looked at high yield savings accounts, which is for your big purchases, like for saving for emergency fund or saving for a house or for a short-term saving that you want to earn interest on. High yield account. The next type of account I mentioned is a cash ISA, which is a tax-free savings account that you can use to grow your money. Next account after that is a lifetime ISA, which you can use to buy your first house or for retirement. After that is a stocks and shares ISA, which is your vehicle for building wealth. You use this to invest in the UK. And then there's a pensions or retirement account, which is to plan for future you, to save for retirement. And lastly, I added the bonus point of the credit card account. So essentially, you need to ensure you have at least 3 of these accounts if you want to have financial stability and also like ensure that your money works harder for you. So that will be all, guys. If you found this video helpful, don't forget to like, subscribe, leave a comment. Let me know what you think of this video. Until next time, thank you so much for watching. Bye bye.